Boom. All right, what's up, you guys? It's Roy, it's Jacob. Welcome back to the channel. In this short video, I just want to talk to you guys about a few of my thoughts around the current state of the equity markets, because things are starting to get pretty choppy. As you all know, the past couple of months have been rough, but in just this past week or so, we are seeing heightened levels of volatility following some of the macroeconomic announcements that have come out, whether it be the raising of interest rates or the tapering of bond purchases. These announcements out of the Fed are definitely scaring investors. If you've been involved with growth, you would have been getting pretty smoked like myself. I know a lot of you are interested in those aspects of the market, the exciting, the revolutionary, those hyper growth sectors of the market, which again, over the past couple of months have been getting absolutely obliterated. And even now that is bleeding over into some of the mega caps and equity indices like the S&P 500 and the Nasdaq, which we will be looking at today on the charts, the SPY and the triple Qs. Okay. So on top of the fundamentals, on some of the, once again, the macroeconomics that are at play right now, I also want to talk to you guys, which I also think is more important, and the real reason that I wanted to record this video, about some of the psychology that comes along with the red days and the bad times, the emotions that not only myself, but I know a lot of you guys are dealing with as well when it comes to red days. When you wake up multiple days in a row and your portfolio is dropping, you see red in your portfolio, losing thousands, tens of thousands of dollars on a daily basis. Trust me, I know the pain, but it's important to understand that that is just part of the game. I will talk about this more as we dive into the video. So let's just get into it, you guys. But before we do, please give the video a like if you've been losing money like me. Let me know in the comments down below if you just need a digital hug, if you just want to talk, whatever you guys want to talk about, go in the comments. Great community with the Waves fam. So hit the comments down below. And hey, if you're not subscribed, subscribe to the channel, join the fam, okay? So I do want to read through this. This is the intro to the newsletter that I sent out to the portfolio group, the real ones, this morning, and I want to read it to you guys too, because I felt after just finishing writing this, I felt it's like I should probably make a video about this and just send it to the whole YouTube fam, okay? So Thursday, we're seeing the FUD, fear, uncertainty, and doubt. Monster showing his ugly face once again. Tech players are the major losers in the market today. As we covered yesterday, inflation is still hot, but raising rates are overshadowing that inflation news in the minds of investors. It's pretty crazy that there's still so much fear in the markets, but I do understand it to an extent. There are many investors, including myself, that have lost a lot of money over the past few months. Most individuals, especially if they're newer to the markets, can only handle so much loss, literally and figuratively. Again, as we've been saying, there's a lot of poor retail souls, retail Joes, who have just been getting absolutely smoked, and they can only take so much. And they literally, if I feel like there's a lot of people in the markets, and I feel like this is an objective truth, that have lost all of their money, and it's left a sour taste in their mouths, and they're not going to re-enter the markets for a very long time. So that is the unfortunate truth, but again, you just got to be real sometimes, okay? So during mini winters like this, it's important to stay warm, stay optimistic, and remind yourself of the fundamental bull arguments that made you bullish on your favorite growth plays in the first place, even if they've been getting smoked. Heads up, soldiers. Hardship builds character. No rain, no rainbows. Okay, so remember that, you guys. What is it? The sun always shines brightest after the rain. You need to understand. You need the dark times to appreciate the light. And those are all cliches, but they're cliche for a reason, and that's because they're true, right? Again, times have been hard, and it sucks, as I just said. And I know a lot of you have been experiencing this, just days in a row where your portfolio is bleeding out, where your net worth is going down, where it's like, I could have used the money that I lost today to buy this, to buy that. But if you guys are playing this game, that's just not the healthy way to think. Someone in the Discord, I was talking about this in the Discord before this as well, and I actually just recorded a video, but I wanted to sit down and record this one as well because I was talking in the Discord to a few people about this. So again, it is tough, you guys. It's hard, even after years of being in this, which is what kind of the conclusion that I've come to, and that's just the reality of the situation. It's not time in the market. It's not timing the market. It's time in the market. It's the time you've dedicated to this game. It's the amount of times you've gotten slapped in the face and the callus that's built, that those hard times have created on your cheeks, so you can get slapped over and over again while still having just the mental fortitude and the willpower to stand back up and get back in it. Okay, so that's the main thing that I want to say, you guys. The reason that, and I want to make it very clear, when my portfolio is bleeding out for days, weeks, months at a time, it sucks. It's hard. It does affect me emotionally. But do I let it affect my underlying happiness? I do my best to not. And I achieve and I succeed at that most of the time. Again, everyone has bad days. It sucks. It sucks sometimes, especially when I know I have to address you guys, especially when I know a lot of you guys are seeing what I'm doing, and it sucks to fail. Again, as a competitor, as someone who plays this game for the sport of it as much as the money aspect of it, it sucks to not win, to not succeed on a trade you make, on something you do. But that's just the reality of the game, you guys. Again, been in this game for almost a decade now. I've made a lot of money and lost a lot of money time and time again. And I know it will continue to happen time and time again. But the main thing is now I'm a far, far richer man by not only by other means, but by trading, by the investments I've made over the years. I've multiplied by factors of tens, like factors of like X. Like, I don't know what the exact factor on my initial investment is, but it's in forward, like probably 30 to 40x my initial investment, something like that. Okay, so all that matters is that you stick with it, you guys, and obviously you have to put in the work. And putting in the work is ultimately, at the end of the day, not only in trading or investing, but in any realm of life and any venture you ever take on. Putting in the work, putting the time in, actually working harder than others, is what will earn you the payday. That's why in this the past year or so, the markets, Dogecoin is a great example of that. Meme stocks have is a great look into how inflated the market environments have gotten, just because there's so much reckless capital, and so much capital that wanted just to make money quick. And that's human nature, right? Why work hard for money when you can just YOLO it and make it make a year's salary in a day, right? And that's happened many times. Okay, and that's usually a bad sign. That's usually a sign of the highs. That's usually a sign that there's too much capital floating around. And again, that happens. People get lucky all the time, but that's not realistic when it comes to the long term. It can happen, and it will happen over and over again, but it's not a healthy way to think. You gotta earn your place. Again, not only the markets, but in the financial sphere as well. You gotta earn your place to an extent, and you just gotta play smart. And once again, just keep at it, because ultimately what matters and what creates that emotional fortitude and that stick-to-itiveness is actually sticking with it in the first place. Okay, motivation follows action, and sometimes you just kind of have to will yourself into acting so that motivation will follow, especially during the hard times. Okay, so we'll call it there, you guys. I just wanted to vent a few of my thoughts with you. Let's talk about the SPY Nasdaq from a technical perspective and just call it a day. All right, so the SPY is currently bouncing on the lower end of this ascending channel that's been in since October, since the beginning of October. You can say you can pretty much say this is the bottom of this ascending channel. Top right here, bottom, this is creating this medium-term ascending channel. As of today, we have bounced perfectly off the bottom of at least this trend line. You could draw it like this. I don't think that makes sense. I'm going to draw it right here because there's more touch points, and I think that's more that is more efficacious. Okay, so we did just bounce perfectly off that line of support on this medium-term ascending channel today. If we break below that, that is not a good sign, you guys. Okay, it's a very bad sign from a technical perspective if we break below that and close the daily below that. You can see here, on 2 days, we did actually break below this line of support, but we did not close the day above it, which is a good sign. If any point from here, pretty much, if we were to close the daily below where we're at now, at about 465, if we close a day below 460, that to me would be extremely bearish, and I do think we will see more downside. Okay, so just keep an eye on that. We are still, however, trading in this range, even in the wake of, again, the actions of the Feds, raising rates, tapering bond purchases. Good news for the dollar, bad news for markets. We are still trading in this range, okay? So there is a solid floor around here. There is some solid support around here. And hey, maybe we do bounce here and start to make our way back up again prior to really slowing things down. I do think over the course of the year, just as a matter of rates raising, it's very, very unlikely, extremely unlikely, that the SPY, that growth stocks as well, rip like they did last year. That just doesn't make sense to me in this in this macroeconomic environment. But I do think we will see another little jump up, followed by just a lot more sideways zigzag price action. Okay, so I'm optimistic that, again, I'm an optimist. I'm an optimistic guy. I do think we'll see another move to the upside. But again, I do think for the most part, this year is not going to be like last year. And this especially applies to growth sectors. I don't think we're going to see... Personally, I don't think we're going to see new all-time highs in a lot of like growth assets and growth stocks, growth equities, hyper growth. But that said, I do think I'll just tie in the little growth argument here. Growth stocks are way, way, way undervalued from a medium to long-term perspective. I think that's, especially considering the fundamentals of all these companies are completely unchanged and only getting better over time. That's, again, investors has been scared out, and there's a lot of opportunity out there in the markets right now. But again, I would say growth is more appealing than the S&P and Nasdaq right now, if I'm being honest, just because they've been getting so beaten down. So Nasdaq right here, Nasdaq pretty similar ascending channel, but Nasdaq is in like a super clean, very long-term ascending channel dating all the way back to September of 2020. So almost a year and a half this ascending channel has been in play. You can see here for the first time in that year and a half, just on January 10th, just a few days ago, the Nasdaq did officially break this channel. But once again, you can see here, same as the SPY, little bear trap right here, broke below it, immediately got eaten back up, huge bounce up. Today, though, all the gains have been erased. So similar to Nasdaq, again, same story, different charts. If we do break below this line, if we do close a daily channel below this ascending channel, that is bad news for the overall equity markets, and I personally will be adjusting my portfolio accordingly. But hey, maybe we make it back up, maybe we trade in this range, because this is also in a shorter term kind of just wedge formation, symmetrical triangle right here. And hey, maybe it is possible that we just trade within this range, and if we break the short-term resistance, I do think the Nasdaq could come up to test the top side of resistance on this overall ascending channel. Okay, so again, you guys, investors overall, there's a lot of fear in the markets. There's still uncertainty. We're seeing ups and downs. We're seeing the roller coaster, which also comes, again, with that emotional roller coaster. So just stay strong. Again, remember that hardships build character. You just got to stick with it. Keep learning, keep growing, because ultimately that's what will dictate winners from losers, not only in the markets, but in life as well. Okay, so again, let me know in the comments down below. Just talk to me about whatever you want to talk to me about. Talk to the fam, talk to the home team about whatever you want to talk about. You just want a digital hug. Ask for it. Someone will give it to you. Okay, so I'll see you guys downstairs in the comments. Until next time, always remember, take action, make waves. Peace, guys.